Good afternoon and a warm welcome to our online masterclass on the current state of impact investing on the African continent, brought to you by the Bertha Center for Social Innovation and Entrepreneurship. I'm delighted to see so many of you joining us this afternoon as we delve into this critical topic that has the potential to drive positive change and sustainable development across the continent. My name is Shiloba Mawela. I'm the managing partner at Siamo Impact Partners and one of the co-conveners of the UCT Impact Investing in Africa Specialized Short Course. We're delighted that the course will be hosted both in Nairobi this July and Cape Town in September. This afternoon, I'm joined by an esteemed panel of speakers, each a leader in their respective field, to take a deep dive into the current landscape of impact investing on the continent, exploring key trends, opportunities, challenges, and success stories that are shaping this investment approach and strategy. We'll hear from our experts and practitioners who are at the forefront of impact investing in Africa, sharing their insights, experiences, and lessons learned. Impact investing has emerged as a powerful tool for addressing social and environmental challenges while generating financial returns, and nowhere is its impact more profound than in Africa. As the world's youngest continent, with a rapidly growing population and diverse economies, Africa presents both unique opportunities and complex challenges for impact investors. Throughout our discussion, we'll seek to answer important questions such as, what are the key drivers behind impact investing in Africa? What sectors and industries are attracting the most investment? How are impact investors measuring and managing impact? And what are the emerging trends for this vibrant continent? By the end of this webinar, our goal is not only to deepen our understanding of the current state of impact investing in Africa, but also to inspire action and collaboration towards unlocking the full potential of impact investment to drive inclusive growth. I encourage you all to actively participate, ask questions, and engage with our esteemed panelists throughout the webinar in the chat feature. We'll also have a dedicated Q&A functionality that is available throughout the webinar, and we'll also take some of your questions live. Once again, thank you so much for joining us. And without further ado, I'd like to hand over to the panelists who will introduce themselves, their work, and their interest in impact investing. Sawa, I'll start with you. Thank you.
Sorry, I was trying to unmute myself. Hi, everyone. It's really lovely to be here. Thank you, Shiluba, for convening this session. My name is Sawa Nakagawa. I'm the Executive Director of Alpha Mundi Foundation based in Nairobi, Kenya. So Alpha Mundi Foundation's mission is to strengthen the long-term commercial viability of SMEs in Africa and Latin America to drive economic transformation. We do this by providing blended support to SMEs, particularly at the intersection of gender and climate. So I've been involved in the impact investing field across Africa for some time. I led an impact investment company called E Squared in South Africa, and also running a consulting firm focused on impact investing through an organization called 3 Arrows Impact Partner. And it really has been a privilege to be involved in the impact investing South Africa, the NAB for South Africa, over many years, and see the industry grow. So I would say, I'm an active member of the impact investment community. And certainly over the past decade or so, there has been tremendous growth. I would say there was a time not too far in the past where people were asking about the definition of impact investing. I think we've moved beyond that point. Obviously, there are some other definitions where Potentially, people might be confused about whether it's blended finance versus catalytic capital. Maybe there are different definition challenges, but I think the industry has moved forward. I think the question now is, how do we mobilize more capital, and how do we allocate more capital towards perhaps some of the more challenging sector or thematic areas? And also, how do we mobilize local capital within Africa as a new opportunity? I'll stop there. Thank you.
Thank you so much, Sawa. Thank you so much, and we are so honored that you are here joining us as a panelist. Arif, if I can please hand over to you to also do a similar intro around your work and your interest in the topic. Thank you.
Thank you so much, and greetings from Nairobi. Great to meet all of you, and thanks to the organizers for inviting us. It's a coincidence, I promise you, that the first two speakers are based in Nairobi. That wasn't planned, but nice to have Sawa in Nairobi as well. My name is Arif Neki. I run the SDG Partnership Platform. It's a unique ecosystem platform that we launched at the UN General Assembly in 2017 to really create this ecosystem of multi-stakeholder partners to do one simple thing. Our 30-second elevator speech is we convene, connect, and catalyze SDG partnerships, financing, and investments. And why do we do that? I think we all know of the tremendous gap in financing for the SDGs. There's not a lot of years left. We also know that that kind of gap is not going to be filled, or close to $1 trillion for sub-Saharan Africa. So we need to really break the silos and work together, avoid replication, etc. And I think the other big issue is a number of countries, including Kenya, are now moving up the scale into becoming lower middle income countries. And what does that mean? That means that those sweetheart grants from bilaterals that we've been so used to for the last 60 years are shrinking. Donors are moving from aid to trade. We're looking at more catalytic tie-offs of grants before donors can go on to LDCs. In that environment, we need to think about what the Secretary General of the UN speaks about, which is the transition from SDG funding to financing. How do you continue your development impacts, but not have those kind of resources to work with? And as we know, ODA in itself is a small portion of the broader kind of capital markets in the country. So for us, it's been very interesting to try and also bring the whole UN family, 24 agencies, funds, programs to global head offices to start thinking about SDG funding to financing in about a $2 billion program we have with 15 emerging joint programs with the government of Kenya and multi-stakeholder partners. More specifically, my interest has been, given that I've been a banker with Societe Generale, that I've run a foundation with the Aga Khan Foundation for East Africa for 14 years, and given that I've been the lead of the task force for the National Advisory Board for Impact Finance that Sawa spoke about for the last 5 years, and we've now finally got ourselves formally established, as well as deputy chair for the Africa Venture Philanthropy Alliance and for the Finance Trade Investment Network. This is something of great interest to us, but also to make sure philanthropy is part of this mix. 20 years ago, I had the privilege of founding the East Africa Philanthropy Network with 300 foundations. So how do you bring this fruit basket of players to come together and look at more risk capital, because that's really what we're particularly focusing on, and to try and understand how we can create sustainable models of financing that are not anticipating future grants down the line. So exciting work, great interactions with the Bertha Center and this group here, and delighted to be invited. Thank you, and look forward to the conversation.
Thank you so much, Arif, for that comprehensive introduction to your really exciting work, and especially around collaborations and partnerships and the importance of those. Next up, we would like to hand over to Hamdia, who will also introduce herself, her work, and her interest in impact investing. Hamdia, over to you.
Hello, good afternoon. Good afternoon to everyone. My name is Hamdia Ismaila. I work for Savannah Impact Advisory. We are an impact-aligned advisory firm and also a fund manager. We manage different assets. And I am so interested in impact investing because I think that we need to begin to look at putting our money where our mouths are. I mean, wearing my investor cap. So, and also really trying to see the impact of, on the ground, the impact of what we do. So it's been an interesting journey for me, trying to ensure that, you know, the communities in which we work, the money that we put out there actually drive, you know, make changes in the communities that we put in money, in the companies that we are putting money. There is impact that is felt across where the company is operating, and also making sure that the environment is conducive. And so I have always been interested in this field, even when we haven't coined the name. And we've tried to do different kinds of things that is now coming to the fore. And as an investor, I've always looked at new things that could really drive the greatest of impact. And so, yeah, I think I would just leave it here. That's what I've done most of my career in financial services. And so I will leave it here as we deep dive. Thank you.
Thank you so much, Hamdia. And we're actually battling to see your video. I'm not sure if you can maybe turn off your video and turn it back on. We'd love to see. There you go. Oh, we're so honored. Thank you so much, Hamdia, for joining. I think maybe to get us started, I'd like to find out from the panelists, how would you describe the current state of impact investing in Africa, and what are some of the key themes that are emerging? I know you all represent various corners of the continent, so yeah, please share based on your understanding and your context. Anyone can start.
Let us know who you'd like to start.
Okay, Arif, I think you've got the mic. You can please go ahead.
Sure, thank you very much. I think that what's interesting for me, if you take a helicopter view, I mean, the expression impact investing is in vogue, and everyone loves to kind of talk about impact investing. But when we really think about the socioeconomic stratas and demographics in Africa, it seems that impact investing is almost sort of a subset of PE and VC investments in Africa. Because almost everything you do that has some kind of an SDG link or an impact link tends to make impact. And this is the impact with a small I. This is not, you know, a specific definition of a specific fund on impact. So I think for me, it's really interesting to say that according to the latest report by Bertha Bridges, $4.1 billion of US capital was invested in Africa in 2023. And this was 21% lower than that was invested in 2022. As it is, we know Africa gets a kind of measly slice of global impact investing funds. But while the total amount of funding decreased, funding for early stage ventures, let's say below $1 million, remained largely robust, largely the same, which shows that there is a sustained and even potentially a growing interest in Africa in that particular segment. Fintech has attracted most of the funding. There's also funding around clean tech, you know, wash, etc., and health. We're seeing that sectors like health that were traditionally kind of a little iffy for private sector investors, now with big data, technology, and innovation, including AI, we're seeing some really interesting models for impact investing to come in very quickly, even at the level of primary healthcare, which is all we all need. We don't need 60 million Kenyans going to secondary and tertiary care and PET scans and CAT scans. We can't afford that. We need to stay as much as possible in preventive, promotive household care. And we don't even have the doctors and nurses that we could produce fast enough to address the demographic expansion. So we need kind of the second frontline force, which is your community health providers. With McKinsey, we did a study that identified $6 billion investment opportunity in Kenya alone for private sector in primary healthcare, which was quite staggering because we didn't expect that there was this kind of a potential appeal for private sector. People talk of primary healthcare as, pit latrines and wash and that kind of thing, but they didn't think about wealth creation out of primary healthcare. We've mapped subsectors, deal sizes, and understood the diagnostics, risk pooling, a number of areas, insurance, etc., provide incredible opportunities. And we've actually, through our platform, unlocked about $200 million of primary healthcare investments in Kenya already. So I think overall, just to give you a sense, huge interest. I think one of the broader issues that we discussed at the Africa Climate Action Summit that Kenya hosted recently before COP28 is that there seems to be a big gap between real risk in specific types of markets like Kenya, South Africa, Nigeria, etc., versus perceived risk. And we need to essentially, rather than complain about that, we need to change the narrative. And we need to think about our natural capital. We're one of the two lungs of Africa. We have amazing green assets and carbon sequestration that we do, and yet we only pollute about 3% of the environment, but we have 60% of the climate effects. And I'm speaking from a neighborhood where walls and houses and electric poles fell down even last week due to flooding. So I think the opportunity is huge. We need to see how we can shift the narrative somewhat. And we need to be able to appeal to a much more nuanced narrative for potential foreign direct investment coming in. And I've just come from a meeting where, folks like Alpha Mundi and others are on our list. We're bringing about 30 Swiss investors in 2 weeks' time. And we're actually showing them concrete investment models. We're showing them concrete opportunities. We're talking about de-risking. We're challenging the Ministry of Finance and saying, okay, you're talking about enabling environment, but why is this particular $1 billion Turkana wind project, for example, not able to move to phase 2 when the financing is ready? So I think we need to get much more granular in our facilitation of these types of projects and move away from the more fluffy kind of broader discussions, because ultimately lives change when you land concrete investments on the ground. But I'm very optimistic, and I think there's huge opportunities to work together, and we look forward to further discussions during our financing summit in June, during the Africa Impact Summit in July, and we're also hosting an Impact Summit in November with the Africa Venture Philanthropy Alliance. So hopefully we'll see you folks and have deeper conversations. Thank you.
Thank you so much, Sharif, for that great overview around some of the activities that are taking place specifically in East Africa. Sawa, if I can maybe turn it to you, how would you describe the impact investing landscape, specifically with a Southern Africa focus, given the extensive work you've done in the region?
Yeah, thank you. So I sadly left South Africa 3 years ago after spending 12 years there. So I'm kind of a novice resident in Nairobi, almost 3 years. I would say, some of the key themes that I'm seeing, and maybe this is not necessarily specific to Southern Africa, but where I'm sitting is around the sort of the climate and social intersection. And this is not just because Alpha Mundi Foundation specifically focus on climate and gender and increasing the nexus, but I think there is a interest in certainly the need, not just focusing on climate, but incorporating some kind of social lens, whether it's gender or it's more about people's rights, or it's about the well-being of children or community members. So something around climate and social sort of social lens, which I think is relatively new, perhaps. In the case of South Africa, I think we typically focus a lot on job creation, right? That's just the way things are. And also, as for those of you people, not everybody is from South Africa, obviously in this group. BEE is always an important issue in the context of South Africa, which is basically redressing historical racial discrimination related challenges in South Africa. So maybe though moving beyond that, even in South Africa, to say, you know, people that are historically marginalized, people that are socially excluded tend to face bigger challenges from climate change by having exacerbated impact. So how do we address that kind of specific challenge, whether it's through investing in agriculture and food initiatives or other types of innovation? So I think that's one. I think where I'm also sitting is this big question about how do we mobilize capital, and Arif, you're in the exact spot, you know, working with the private sector, working with UN type of organizations, working just broadly with philanthropic industry. So how do we sort of blend or bring in different types of capital to either de-risk traditional minded investors, to overcome, like you said, some of the either perceived risks or real risks, to invest more into the challenging sectors? I think that's like a big conversation, and I really look forward to speaking to the participants of this session to, you know, understand, you know, what are some of the, you know, interesting things that you're seeing in your space, and how do we collaborate? Because if, you know, the challenge is massive, the financing gap is unfortunately still huge. So unless we bring in that type of capital, if we just rely on very traditional impact investors, perhaps we're not able to allocate capital to the really needy sectors. And I think if maybe the last point I make is, if I look at some of the impact investing fund management activities, I think because of the challenges we're facing economically in many parts of the continent, I see many of the fund managers perhaps more doubling down on their portfolio companies rather than allocating capital to new companies. And I think that trend hopefully reverses, but, you know, many of the countries across the continent are having economic challenges, and unfortunately, even if, you know, the investment strategy typically in impact investing is through private capital, you know, these businesses are not immune to economic challenges. So I think doubling down on the investees, you know, spending a lot of time and effort into portfolio management, I think that's just inevitable. Maybe I pause here.
Okay, thank you so much, Sawa, for that. And I guess your move to Kenya is how we followed the course, also launching in Kenya. Hamid, pleasure. Hamdia, if I can maybe please turn that same question to you. How would you describe the state of impact investing specifically in West Africa, and what are some of the key trends and themes that you're seeing in that part of the continent?
Thank you. Thank you. So within the context of West Africa, I think generally we are seeing a lot more cross-border collaborations. Generally, I've seen a couple happening in East Africa, and it's happening in West Africa as well. And that would be very helpful. And if we are able to also move on, fintech is a key theme, but now we also have to look at across continental payment system, which would actually really help us. But fintech is one. Energy is one of the key sectors. Agriculture has always been a very key sector. Arif mentioned healthcare. It's coming up very strongly within the region, especially around primary healthcare and diagnostics, and also some specialized healthcare systems that are being put in place. So other key trends that I'm seeing now also has to do with measurement. I think people are beginning to be more interested in really understanding really understanding what the actual impact is having on the ground. And so measurement is becoming a very key theme. Whenever you do mention that you're an impact investor, everybody wants to understand, where have you been impacted over the last few the times that you've been investing. So these are the key trends that I'm seeing. I think that there is a lot more to be done in these sectors. They seem to be key. There are other ones that we need to work on. I think one of the key areas that we also have to begin to look at, that we are working a lot on it in Ghana and Nigeria, is really local capital mobilization, because we feel that we need to have a lot of local money to be put into good use, and we focusing a lot more on pension funds. I will speak about Chigaba later, and so that we can actually beginning to bring more institutional capital also locally to be able to get into the impact space. I also see a lot of also cross collaborations around healthcare. So, for example, we are beginning to see some managed health care systems that is trying to build across the region, so that they can provide more comprehensive type of healthcare. So these are the key trends that I'm seeing. I think there is a lot more to do. There's also a lot of discussion around the kinds of vehicles that we need to use. Arif did mention about the fact that now impact investing, we look at it within the lenses of maybe funds, venture capital, private equity. But the whole idea is that sometimes you need to move more capital at scale. And so now we are looking at how do we move more capital at scale, and how do you bring in local capital mobilization. There's been a lot of discussion around trying to also mobilize more catalytic capital, not really philanthropic, but rather more catalytic, so that we can use that to unlock more private capital to really direct it at impact. And so I see these trends and these conversations coming up. Last year, we hosted the West Africa Deal Summit, which was very important, because then we realized that in all of these things that we are talking about, entrepreneurship play a very key role, and we need to really support entrepreneurship and support companies. And so we are looking at how do we support companies in a more holistic way to work across the region, especially now that we have the Africa Continental Free Trade Agreement. It just makes sense that we are able to support and build companies at scale. So that's also one of the key things that we are seeing. Last year, Nigeria hosted the West Africa Deal Summit. And so it's that collaboration and really hitting the key themes, and also working with government around the regulatory side on policies to just enhance more participation in impact investing. And so maybe I'll pause here, and as we continue, we will keep highlighting some of these things. Thank you.
Thank you so much for that, Hamdia, and for also really sharing some of the initiatives that are taking place in West Africa. Arif, maybe coming back to you, all the panelists spoke around the importance of mobilizing local capital, but also the need for collaboration. Given your experience in SDG partnerships, what would you say are some of the challenges behind the continent's large SDG funding gap, and how critical will partnerships be as we move towards the 2030 SDG target goal?
Yeah, thanks, Shuluba, and I'll give you my candid thoughts, but this is not the official UN party line. This is Arif Neki's views. So I think that we've just been oftentimes traditionally caught in our silos. We've been so used to member state funding. We've got a lot of DFIs, IFIs that are run by accountants and specialized people, but who may not have run businesses in horticulture on the ground in Africa. They have sometimes less specialization. We have, a lot of, I say, inertia, if I might say, that we need to break. And we need to really create an environment of collaboration. So with the SDG Partnership Platform, it was interesting because Ford, Mastercard, Hilton Foundation came together, said, we need to bring philanthropy around this new thing called SDGs that's being adopted next year. And let's try Kenya as a platform for an SDG philanthropy platform. So November 21st, 2014, we launched this platform. I just joined from Aga Khan 10 days earlier, and they said 200 people coming in from all sectors. We're going to launch this exciting platform. And I said, great, can I see the list? And they said, no, you're it. So a lot of these partners had not even been to the UN campus. So it was really exciting to bring civil society partners, philanthropy, private sector, and really create this microcosm, if I might say, of partners. Launch a multi-partner trust fund in New York, create windows around the president's Big Four agenda, health, manufacturing, housing, and agriculture, food systems. And what we did was create clusters of partners, private sector, philanthropy, bilaterals, multilaterals, civil society, within each of these windows, and create these steering committees that could hatch consortia around very concrete projects. Where necessary, we do some level of research and market development support, some level of TA if we need to help package products, make them investable. But I think one of the lessons we might have learned over the last 10 years is really to go behind the philanthropic reflex, thinking that people will do the right thing for the love of God, compassion, and philanthropy, which is something you start with. But to sustain it, you need what I call enlightened self-interest. How do you create that win-win for private sector? How do you create the win-win for bilaterals, multilaterals, DFIs, who can go back to their head offices and report success? And what is the formula for finding that sweet spot between for-profit and not-for-profit, the shared value, triple bottom line, profit with purpose approach? And so what we started doing was create pipelines of investments where we create consortia. And it was interesting because they almost sort of tended to come together almost organically between themselves. We even had a couple of competitive partners in the same sector sit on the steering committee and actually eventually even work together. We have a couple of telcos, the Safaricoms, others. So what we tried to do was to find the opportunity to glue the partnerships on enlightened self-interest, results that actually help everyone create more wealth and impacts together. We also help to link different parts of the market. So for example, we have SMEs that are driving jobs, that are driving Africa's economic development. All this formal sector stuff is really minute and perhaps overrated. The real engine of the economy is the SMEs. How do you link these to the bigger corporates? So we created, opportunities for them to be trained, skilled, and then linked to the value chains of large companies like Safaricom, etc. So that sustains them because over time, these companies get a ready-made, portfolio of great SMEs they don't have to invest in. And these SMEs get onto the gravy train because whatever they're doing now can be sustainable for the next 50 years. So I think the big trick for me was A, enlighten self-interest, B, make sure it's multi-stakeholder, C, create a core backbone, like a platform and a coordinator like myself, who has no vested interest, and be neutral because the UN is not pushing any technology, any country, any state ideology. We're owned by 198 countries, including Kenya. So you're seen as a bit of a neutral broker. And when it comes to fixing stuff and unlocking constraints, including with government, national and local, you have the convening power of the UN to come in and sort of quickly move things because, time is money. And if I'm an investor, I don't want to wait 5 years to go through all the hoops. I want to be able to move very quickly. And I don't want to be giving brown envelopes under the table. So I want total transparency and accountability, which you can do with a platform like this. For us, partnerships has been a really interesting way of getting folks to work with us. Many of them have been in Africa for 100 years, Philips Foundation, Safaricom, Vodafone, all of these folks. And yet they do work with us and they see the value of this. The second thing I think is my big beef is, I think one of the biggest things that avoid convergence, because what we need is convergence and avoid the fragmentation and replication and all kind of unnecessary competition. The biggest thing that holds us back is branding. So whether it's bilaterals, whether it's NGOs, whether it's international NGOs, whether it's foundations, everyone wants to do their own children's program, their own women in agriculture, their own youth in ICT. You know, how do we converge? How do we just get everyone together and then have 50 logos up there? And, you know, a wise old man said, it's amazing what you can achieve in life if you give everyone else the credit. So let's find a way to converge. And so my kind of favorite saying is, let's drop our egos, logos, and silos and converge for impact, you know, and give everyone the credit. I think the other thing to sustain partnerships is to ensure that the initiatives we get behind aren't what I call little pilots. You know, in Kenya, we have this joke about our disease. It's called pilotitis. You know, it's one pilot after another pilot after another pilot. And some of us old timers have seen pilots, you know, from 10 years ago be recycled as innovations and come back old wine in a new bottle. So what we need to do really is think about scale and systems influence. And we need to think about perhaps two basic ways of sustaining these investments. One is a business model that has downstream income that can ensure that this will work for the next 50 years. The other one is about embedding this within government as the central driver and ensuring government's commitment on their multi-year expenditure framework. We're doing the world's first development impact bond for adolescent sexual reproductive health, or we like to pretend it is, but we haven't heard from anyone else yet, so we think it's the world's first. 500,000 girls accessing 300 facilities in 10 counties. An investor window where we have UBS Bridges outcome fund window with SIF and other partners coming, only paying on performance. And the idea is to scale this and eventually take all our logos out and embed this in government. So if we cannot sustain the things that we do, then all we're doing is really creating puffs of excellence in the sea of deprivation that die when the grants die out.
Correct.
So I feel quite strongly that we really need to be thinking backwards from that point in terms of sustainability, in terms of what our business models look like, and then think about which partnerships can sustain this kind of work. Thank you.
Thank you so much, Sharif. And I think an important point around the need for partnerships and really dropping egos and silos. If I can maybe then turn it to Hamdia. Your firm was recently appointed as fund manager for the $75 million Sigaba Fund of Funds to unlock pension funding for the SGBs. I'm curious if you can maybe share more around the fund and how you were able to actually collaborate and find partnerships to ensure that multiple stakeholders were involved to maximize impact in West Africa. Please go ahead, Hamdia.
Thank you. Thank you so much. So Impact Investing Ghana. So the Chigaba Fund is supported by Impact Investing Ghana, which is what Arif is currently chairing, and we're going to be launching it in Kenya soon. But what it is that it's basically trying to get national advisory boards for impact investing representing different ecosystems, different sectors of the ecosystem. And so the first thing that we did when we joined, we set up the Ghana Impact Investing Network, is to say that how can we promote impact investing and where do we get the money from? And we wanted to really promote, you know, impact investment into key sectors that I had actually mentioned earlier. And so what we did was that we just started looking and we decided to narrow down home, and we said, look, key issues is around local capital mobilization. So how do we mobilize local capital? We realized that we had a huge pension system in place, of which about over 90% of that money sits in government paper. And we need to develop entrepreneurship, we need to develop companies, and we need to support impact sectors. And we felt that, well, these are people we can actually speak with. We look at the regulation allowed for investment in alternative assets, which has been classified together, but at least there is a way to do it. And so we started talking to them, and they raised a few issues of what their concerns were and the reason why they've not been able to do it. And so we decided that, okay, why don't we create a fund of fund vehicle where we can pool these monies together and allocate to emerging teams, you know, and see an experienced team and see how we can have cross-border investments and see how that works. But then to do that, we needed to also get some catalytic funding layer to be able to unlock that commercial capital, because the pension funds had mentioned issues around liquidity, issues around return, and you know our governments pay a lot much more return on the security, on the government security, and then we also had issues around risk. So we put all this into perspective in designing the Chigaba Fund. So it is a local currency fund. It's going to invest across West Africa region in supporting emerging teams and experienced teams, looking at investments within the nexus of gender and climate, and actually having this cross-border co-investment and also having direct investment in the countries. 75 million is SDG aligned. We are targeting to actually track 9 SDG goals, including partnerships, if that makes Arif happy. We added it because we thought that it's very collaborative. We have a lot of partners coming on board, so we wanted to actually track partnership. So what we did was that we had cross-cutting goals. So goal 1, goal 5, goal 13, and then goal 17 were the cross-cutting goals. And we had specific goals because the key sectors the fund is looking at is, you know, agriculture, agro-processing, light manufacturing, clean energy, financial inclusion, healthcare, education, and technology. So we are looking at these key sectors because the whole idea is to achieve inclusive growth, support entrepreneurship, support emerging teams, and support the growth of different vehicles in West Africa, so that we can invest in different and specific things. Because I think Arif or Sawa might have mentioned it earlier, that we live in a continent that is not really short of debt, to like commercial debt. We have banks. I mean, I grew up seeing banks in this country. We have money lenders. We have so much of those. But we have realized that those are also the reason why our companies are not growing, because the monies are not patient enough. And they don't come with technical assistance to support these companies to grow. So essentially, it's either if you are a small entrepreneur and you are starting, you are working for the bank or you are working for the money lender, or you are just, you know, that's just what you're doing. And if you want to expand and grow, then you need a little bit of patience in the capital that comes to you in a structure that makes sense to your business. Then it gives you room to be able to grow. And these are some of the key things that we are looking at to ensure that, you know, we get that done, and then we build from there. Because really and truly, I see a lot of programs about entrepreneurship development, supporting entrepreneurs, but entrepreneurs need different kinds of capital. They need different kinds of support. So we cannot bulk everybody together and assume that, you know, we're going to give, you know, everybody the same kinds of debt that we require. And we also, so that's what Chigaba really is meant to do. We are using this fund as a demonstration effect. We feel that if it works, then we can come to East Africa and work with the East Africa team. So it's a regional fund. We are targeting managers in 4 hubs, so Ghana, Nigeria, Cote d'Ivoire, and Senegal, but they can invest across the region, the West Africa region. We are looking at some few opportunistic that we can do so that, you know, we build on that collaboration. So yeah, it's exciting for us. We really look forward to really begin to work and see how that goes. Thank you.
Thank you so much, Hamdia. And I think congratulations to you and the team for firstly being the fund manager on such an exciting partnership, but also to see that the fund will be SDG aligned and that you will be tracking partnership. I think an important theme. Sawa, if I can please come to you, I'd like to find out, how do local regulatory frameworks and policies affect impact investing on the continent, and what would you like to see more being done from a regulatory and maybe policy perspective?
It's a difficult question, Chiliba. Thanks for that. I think it could affect in several different ways. So, for example, at the end of the day, typically the investments are made with an exit in mind, if it's in the case of an equity investment. So if that's the case, then obviously we need to have vibrant capital markets for those things to be exited in some ways. So that's definitely something that the government can improve upon to create such frameworks for the capital markets to thrive. And I think another thing is, as Hamdia was mentioning, Hamdia, by the way, we met prior to COVID in Nairobi, of all places. So lovely to be connected here. The role of the private sector in the local markets is critical. So if you don't have proper regulatory framework to incentivize, the likes of pension funds to be investing in this, unique strategy, I think that would be quite challenging. So I think those are potentially two areas that certainly the government can do more to incentivize the allocation to capital in these asset classes. I actually heard recently, I was speaking to the team at FSD Africa, and it's really wonderful to hear about different innovations happening in West Africa, by the way, because they were mentioning this new fund to be listed in Ghana. That's a debt instrument, basically, which is going to basically be like an off-taker potentially for the private equity and venture capital fund managers, so that they can kind of offload their assets into this vehicle, which I think is really important, because we don't see a lot of activity in the secondary market compared to the developed markets, right? Where, many of the exits, frankly, happen to the secondary focused players in the US and in Europe. So I was really thrilled to hear the innovation in there. And I think that type of vehicle setup, right? And FSD Africa is very active across the continent to set up different types of vehicles, but that's not without the support of the government. So I was really pleased to hear about something like this, which I hope would also happen in this part of the world as well. Thank you.
Thank you so much, Sarah, for that feedback. Definitely a tough question, but I think regulation does pose a challenge for unlocking additional impact capital onto the continent. So thank you so much. Arif, if I can maybe please come to you. Given the recent flash floods in Kenya and in the East Africa region, most of those have been attributed to climate change and has raised the need to support marginalized and at-risk populations with relevant and responsive solutions. What more would you like to see happen to address the impact of climate change on communities?
Thanks, Shilpa. I think the floods totally expose the dangers of climate change, and we've seen unprecedented stuff. I mean, in all my life, I've never seen, a bunch of ice hailstones in my garden in Nairobi. Like, we're sitting like a few centimeters from the equator, more or less. So it's shocking, the things that we are seeing, and in many manifestations. But I do think also that it's not just about, force majeure and act of God. It's also man-made weaknesses, because when we see the kinds of drainage we have, when we see the kinds of rural and peri-urban designs and structures for settlements, that's where the over 200 deaths happened. That's where, people were washed away, houses were washed away. So I think it's also exposed our readiness in terms of infrastructure, in terms of ensuring that investments and ensuring that money flows to what we're calling in UN jargon, of course, in global jargon, to those that are left behind or leave no one behind. And therefore, our new whole program for $2 billion with the government and the UN system is entirely through that LNOB lens. And what we're finding is that there needs to be a lot of work around resilience, a lot of work around water, a lot of work around renewable energy, a lot of work around climate smart agriculture. We're also developing a program currently as we speak on biodiversity and carbon credits. How do you protect your biodiversity? We've lost, innumerable species, and this is only getting faster. So I really think that this is kind of this is going to be our full-time jobs for the next 5-10 years at least, if not longer. And I think we really need to be very practical about how we do all of this. And waiting for some, global funds coming through. Sometimes it's like opening Fort Knox. They say, okay, you'll get it in 3 years, but you know what? It'll take 2 years to first of all register and get yourself credentialed. We need to really be moving with the small, medium-sized community-driven projects as well. We need to be creating a lot of de-risking instruments and guarantees to entice private capital away from the usual suspects and the usual capital cities, because that's where the highest poverty is. In Kenya, for example, we have a number of counties, 26, out of which 10 are in the frontier counties, that have about 90% poverty indicators in certain sectors like health, which means basically they're on their knees, and they've been on their knees for decades. And yet a lot of the investments will go below the railway line, in the coffee farms and the old White Highlands, where you have all this wonderful fertile land that is of course local land now, but does not quite permeate to other parts of the country, in the north, in the west, in the coast. So with our community here, with this group that we're all discussing with, we also need to think about how do you drive the capital to those locations where the greatest impact can happen. I don't want to be doing impact financing, next to a 5-star hotel in Nairobi. I mean, I would love to do it, but I'd much rather do it where I can get 100 times more impact sitting in Marsabit or Mandera or one of these rural areas. Which investor will come with me on that? And we need to differentiate between, political risk, commercial risk, understand the forex risk, because we've seen the Kenya shilling, for example, over the last little while lose almost 30% of value. It's only now bouncing back. President Ruto at the Africa Climate Summit talked about why does it take, I think 3 or 4 times the cost of capital for us to borrow in international markets than say somebody sitting in Europe. We are paying default insurance premium on our borrowings, and yet we've never defaulted. So there are certain things, and I'm sure this is the conversation when President Ruto and the Kenya delegation, as the only African country in 30 years, is invited to the state banquet by Joe Biden on the 23rd of May. I'm sure these are things that are going to come up between main course and dessert, because these are really burning issues for everyone. But we have to take the responsibility, as I said earlier, also to improve the narrative and to look at best case examples of climate adaptation and climate mitigation. So a huge amount of work to be done. And I think carbon credits and all of that falls into this, but there is no silver bullet. And I really think that we need to create income streams out of many of the opportunities that we see, even in nutrition, for example, and local nutrition and value add along those value chains, in order that we can sustain smallholder farmers who are faced with these kinds of issues and tailor our financial products to this ever-changing, seasonal variations that they are facing. I'll stop there. Thank you.
Thank you so much, Arif. I think definitely many burning issues, but also a multi-pronged approach and how we then think about addressing some of the challenges that we do face on the continent. You mentioned a very important aspect, which is the need to improve the narrative. And I'd like to turn it to Sawa and Hamdia around, can you share some of the success stories of successful examples of impact investing projects on the continent, and what lessons can be learned from those? Sawa, maybe you can start. I see Hamdia's off video.
Sure. Maybe I can share a little bit about Alpha Mundi Foundation's work as not as a self-promotion, but as a sort of a thought that, what people think about it. And So one of the programs we're running at the moment is called the Raja Impact, which is specific to Tanzania. It's supported by the Swiss government. And we're partnering with SEAF, the Small Enterprise Assistance Fund, to provide specifically support to youth and or women-focused SMEs in Tanzania. So I think the background is that Tanzania, I don't know how many of you have worked in Tanzania, but it's a relatively challenging market compared to, say, Kenya, South Africa, Ghana, Nigeria, or even Rwanda. So the government was really, the Swiss government was interested in almost piloting this approach and see, you know, what happened. So we launched it only last year, and we are able to provide a combination of different instruments. So I think that's also a unique opportunity. So we're able to provide technical assistance as well as grant funding, either sort of general grant funding or specific to impact measurement and management improvement, or what's called the SINKs. You might know that the Swiss government, together with Roots of Impact and the Bertha Center, people would know, was instrumental in developing the social impact incentives, or what's called SINKs. So these are milestone-based grant payments, and as well as what's called impact-linked loans, where upon meeting certain pre-approved milestones, there are some rebates or a reduction in interest rate. So I wouldn't call it a success because we don't know what success is. And I think we are also oftentimes as investors, we're quick to claim successes when we make investments, right? But these are typically long-term investments that we need to really carefully judge what the real impact was at a later stage. But I think what's really interesting, perhaps, about this this exercise is understanding what works in a slightly challenging market, and understanding and listening to the SMEs, who Arif said also are the engines of economic growth in the continent. So what is the type of support that's needed for these types of companies? And particularly in the context of Tanzania, we're looking at a lot of agricultural and food businesses, which are, you know, really at the intersection of climate change and some of the social challenges that we've been discussing. So I have yet to see the success. It's a long 5-year program, and I love to see, you know, success and also partnerships, as we have been speaking about the last few minutes, because we're also wanting to, by providing these types of innovative instruments, we'd love to unlock additional capital from private sector players. So if you know of any active investors in Tanzania, we'd love to partner. And I'd love to also hear from what are some of the successes that you have had in this platform. Thank you.
Thank you so much, Sawa, and congratulations on the really impressive work that Alpha Mundi is doing. Hamdia, if I can turn it to you, can you please share a successful impact investing project on the continent that you've seen and some of the key lessons learned?
Thank you, Shilua. So I think the first one I want to talk about is one of the programs that we did in Ghana, supporting farmers in the supply chain investment we did. It was very collaborative. So there was funding from the Common Fund for commodities. There was funding from Diageo, and there was funding from us. We specifically supported farmers with through rural and community banks. So in Ghana, we have rural community banks who are supposed to really invest in the rural communities to grow. But, you know, we made a mistake to call them banks, so they operate just like one. So we gave them money, concessionary capital, for them to be able to support the farmers in the production of sorghum, because Guinness wanted to introduce more local content by actually buying, replacing barley, imported barley with sorghum. And we put money, it was very impactful because at the end of the day, I think we were able to reach almost about 8,000 farmers. We improved the indirect around transporters, cleaners, so it was a very impactful program. The lessons learned from there is that collaboration works if the roles are clear and everybody knows what they're supposed to do. We work with a research institution that needed to continuously improve the variety, and they also help with the farmers with good agricultural practices. So they were on the ground. We had an off-taker, so there was a buyer to take everything that was produced, and there was a financier who was financing it. So you realize that, such combination actually works because then it becomes a win-win. The other thing that I really wanted to talk about in terms of the continental-wide is the Mastercard Africa Growth Fund. Maybe perhaps because I have spent most of my career in private equity venture capital, and most of the lessons we've learned, and really supporting emerging teams. And most of the lessons we've learned is that it's difficult to support emerging teams because nobody want to do it. Especially looking at a gender lens, because a gender lens fund, it looks at supporting more women. And we have always had issues around emerging teams, working capital needs, warehousing needs, so that at least they have working capital to build the team, they have warehousing capital to be able to do one or two investments. It makes it easier so that when you go on due diligence, you are able to see that, okay, this is the investment strategy. This is how they invested. This is their investment process. They actually follow the process in the investment, and this is how the investment is doing. And the reason why a lot of people don't do emerging teams is because it is difficult to do that, because there is no deal for you to see. So the Mastercard Africa Growth Fund has all this built in, right? So all these lessons we've learned over time, that it's not just easy to get up and say you want to start a fund. You need to create a team. You need to build a team. You need to rent a place. You need to do all kinds of things, right? And usually, as an emerging manager yourself, you don't even have money to pay yourself, but you have to pay other people. So it's difficult to do. It's difficult to do. And this continent hasn't grown yet when we come to private equity venture capital. That is still a long way for us to go with different vehicles. And so really thinking through such a design and putting in all these things makes it very, very, attractive. Like, it's, for me, it's a design that has put in all the thinking that, those of us who have been in the field, we've seen it, but it's difficult to have somebody do it. So really having all of that combination together has been very, very wonderful. I think it's a very good program. And if we can get a few of such replications in that at that scale, we can make a big impact in the continent. Thank you.
I fully agree, Hamdi. And I think, obviously you play an important role in that. You sit as part of the investment committee of that Mastercard Foundation Africa Growth Fund, which, for those in the audience who might not be familiar, is a $200 million funder fund that provides allocation to gender smart fund managers across the continent. And I think what's exciting about that design is the fact that from the GIN report, or the Global Impact Investing Network reports, it demonstrates that a lot of impact investing is actually happening via private equity and VC models. So I think really great that we are seeing such a great project. I want to now turn the attention to some of the questions that have been raised in the chat. Thank you so much to all the participants who have been engaging and really putting questions in the chats. I'll start with the first one from Sikom Nsomi, who asked the question to Sawa and Arif: how do you start working towards the reduction of impact washing, and maybe more specifically impact washing, greenwashing, or pinkwashing? How do we start reducing that specifically on the continent? Arif or Sawa, that question is directed to you. Sawa, maybe, okay, go Arif.
Sawa, you want to go? Go ahead, Sawa.
Yeah, thank you, Siko. It's such an important question. I think that we have a lot of washing going on. We talked about we talk about impact washing, we talk about greenwashing, we have pink washing, there's many washing. I think that I think there are different types of washing at different levels. So I think that if you're the capital allocator, you really need to pay attention to the, like Hamdia said, what is the impact that's been tracked? What is the track record? I think that part has been perhaps a little bit weak, because I think often when the LPs are doing fund management due diligence, I think people tend to focus on risk and financial, perhaps, due diligence more than the impact due diligence. So I think the LPs must really pay attention and spend more time and effort understanding the impact, right? So I think that's one. And I think if you're the fund manager, you also have responsibility to distinguish between truly impactful businesses versus those that are not. And I think, I have a personal pet peeve about people that say any investment that happens in Africa is impact investing. That is such a naive statement, right? I think we have to move beyond that kind of statement. There are investments that cause harm, whether intentionally or unintentionally, and we need to be responsible investors who can distinguish between such investments.
Thank you so much, Sawa, for that. And I fully agree. I think not all investments, by mere fact of the fact that they're happening on the continent, then constitute impact investing. I think it does need to be a deliberate intention to create both the financial return alongside the social and or environmental return on that capital. If I can then go to another question that was raised by Tinako, who asked the question, and Arif, I'll direct that specifically to you. Could the panel share some of the best approaches that have been taken to make impact investment opportunities more attractive to the private sector? So looking at locally, regionally, and internationally, what would that look like?
Thank you. I think when we say to the private sector, I mean, that's pretty broad. Private financiers, corporates, insurance, et cetera, et cetera. But maybe I can just respond in broad terms in return and say that I think that we have this really interesting dilemma, because I feel sometimes a bit schizophrenic. When I'm sitting in the Impact Investing Kenya discussions, we are a network of networks. So we have the Bankers Association, we have East Africa Venture Capital Private Equity Association, maybe 200 entities, pension funds, VCs, PEs. We've got Africa Venture Philanthropy Alliance. We've got East Africa Philanthropy Network. We've got pensions. We've got cooperatives. We've got investment bank network, etc. And what you're hearing is, we're not getting deal flow. We're not getting the right projects. We're not able to move our money, blah, blah, blah. And then, you go across the road and you're sitting with civil society, or sitting with county governments, or you're sitting with Kenya Private Sector Alliance or the Chamber of Commerce. And basically they're saying, 80% of our really exciting new project opportunities that we've identified in our last investment conference haven't seen the light of the day because we can't get the money. And we always have this big issue, why not? And I think structurally we're finding that there's a lot of things we can all work on, and the government can work on. Ticket size is one. I think a big one for us here, which I've tried to sort of start making baby steps towards, is how do you create a TA pipeline to make projects more investable before you actually go and start pitching to donors? So I get lots of opportunities from counties, lots of opportunities from entrepreneurs in smaller settings. But when you see what they send you, you know that this is not going to impress any financier. It needs to be, in a sense, supported and made more investable. So let me say the presentations and the investment pipelines, the pre-feasibility studies, the business plans, the data, the sensitivity analysis, all that needs to happen. And we need to find ways to help entrepreneurs do that, because oftentimes they can't afford the big 5 audit firms and some of the big boys, which I will not name here because they work closely with me. But how do we get some kind of a broader crowding in of TA financing, not little pots sitting in different embassies and different high NGOs? Number two, I think that one of the big issues that we found is that data has always been an issue. How do we create this kind of more robust data? How do we create data around the market opportunity, but also data around the potential impact? How do we speak about impact in the same language? Because one thing the SDGs did, gratefully, was that, or thankfully, was in the past we used to get these lovely corporate business reports that said, oh, we touched 1,000 schools, we touched 500,000 women, we did trees, we did this, we did that. But you have no sort of reference benchmark to say, yes, this bank or this organization or this telco has done this in relation to others doing this or that, because it was very subjective. And the worst one was when people say we touched 1 million lives. I mean, so what does that mean, right? I think now with the SDGs, we have clear goals, targets, indicators, and every country has identified from the global list of indicators which ones they're equipped to move with. So Kenya has identified its own indicators, for example, and in some cases, some proxy indicators that we add on. So that creates a little bit more of, shall I say, transparency around impact, and so helps private sector, financiers, and others analyze and do the due diligence a little more clearly. Thirdly, I think that oftentimes, I mean, one of my concerns has been that, you know, we went with our last minister for ICT, who's head of Google Africa for 9 years, our youngest minister, amazing guy who is now, after becoming a minister, has now moved on to run a financial service, digital financial services company in Africa based in Nairobi. We went to Silicon Valley and did this whole stint around Silicon Savannah meets Silicon Valley, and how do you bring the partnerships and deal flow, all of that stuff. And what we found was that there was a study by a local university that almost 80% of all the IPs, the intellectual properties around the innovations that fuel all these social enterprises, particularly at the early stage, are actually non-Kenyans who own these IPs. And oftentimes it's because, you know, there's $5,000 cash every time a young guy comes up with this amazing innovation. They're bought off and the kids sell them off prematurely. And so we're creating an Africa IP company and trying to see how we can list this and give the kids a bit of stock, a bit of cash flow, but let's not sell the baby with the bathwater. A lot of stock exchange companies are being delisted and the IPs are moving to Silicon Valley or wherever. It might sound like something that not as relevant to the question, but it is, I think, very important because a lot of our innovation, digitization, a lot of our youth workforce, a lot of stuff, how do you get, you know, agriculture to be done not by 60-year-old farmers, but by 27-year-old farmers? How do we move all of this with innovation that keeps people excited and attracted? So I think we have some of those kind of structural issues where if the IP is not clear, investors will not come close to you. They won't touch you, etc. So let me stop there. But I think there's a huge opportunity for us to kind of work more broadly around this ecosystem. We have 5 deal share platforms in agriculture in Kenya. I'm sure Sava is hearing of many of these deal share platforms. But do they talk to each other? You know, again, fragmentation. Again, how do you create game changers and moonshot projects and not sort of little boutique projects that kind of people donor and you tick the box? So I think there's a huge opportunity for us to be thinking about making impact investing much more attractive, much more transparent, much more robust, and aggregating some of the opportunities that we work on. If we can benchmark our standards and indicators in a way that makes it a more often wholesale proposition than lots of little micro propositions. Thank you.
Okay. Thank you so much, Sharif. And I think definitely there is a greater need for a more broader ecosystem play. If I can then come to Hamdia, there's a question asked in the chat by Morgan Mandeville, who asked the question, what role do you see African impact investors playing in mitigating foreign currency risk to catalyze more foreign investment?
Thank you. Thank you, Shaluba, and thanks to Morgan for asking that question. I think one of that mitigation is to get more African institutional investors to invest in Africa, invest in the funds, so that we wouldn't really have to bring in a lot more foreign currency, right? Look, I've been in this fund management business for a long time. Sometimes I even tend to believe that actual performance of African managers cannot be seen because of currency risk, right? So if we can have more institutional investors, African institutional investors to invest in Africa, then we don't really have to bring in a lot of institutional capital from outside. The other thing that we need to do in terms of the de-risking is to make sure that we have vehicles that have some catalytic layers, right? So we have government that pours a lot of money out there for social services. That never really happens. And so government has a role. We have a lot of different programs, philanthropic programs, that we can actually use some of those monies to embed in vehicles to reduce the risk for private investors. And we need to do that. So these are some of the things that we could do to really reduce the risk and bring in more institutional or private capital at play within the impact investing ecosystem. Arif made mention of technology, and Arif, I'm happy that you've seen it. I've seen it also, and it's very worrying. A lot of our technologies are not African tech. They are not African. We don't own African IPs on them. And right now it's so early, so we are not seeing it. We will see it in the future when the companies start listening, and then they will tell you that it is not an African company. It is based here, it's working here, but the IP is not here. And it is because the high net worth individuals, angel investors that are supposed to come in at the very early stage from the onset to help these young entrepreneurs are not there. So most of these companies will be domiciled in Delaware, because some of the American investors understand that, right? And so they will put in the money and so then the IP has to be registered there. The company actually is an American company. It is not a Kenyan company or a Ghanaian company, but it is because that is where the money is coming from. We have seen that also in fund business. Most VC funds in Africa are actually domiciled in Delaware, because that's where the high net worth individual, the family offices understands it, and they will put money in those funds. So there's a lot more work to be done if you want to really get this impact, really move money at scale. And that's why, for me, I've always been very interested in local capital mobilization. How do we mobilize local capital? We have huge amounts of money sitting in the continent, and we are not utilizing this funding to build the economy, to build the economies. And if they don't grow, that vicious cycle will continue to run. And so we need to look at it. I know that I digress because I was supporting Arif on that case. But yes, really one of the way of de-risking, I always say the first de-risking to do is to get local institutional investors to invest in local currency funds. When we have local currency funds, we don't have issues of currency risk. So let's do that. And I think that is one of the first things we should do. And encourage the philanthropists who are really doing a lot of wonderful work in Africa to begin to look at these vehicles and catalyze some of these vehicles to reduce the risk for institutional investors to come in. I think that will be very, very important, and that will move us faster than we have anticipated. Thank you.
Thank you so much.
Could I take the opportunity just to reinforce one quick point, if I might?
Sure, just one point.
You can see we're feeling a bit passionate.
Sure, please go ahead, 1 point, Arif.
I'm going to use an analogy, okay, because I talked about establishing the East Africa Philanthropy Network 20 years ago. And when I talk to a lot of NGOs and foundations and partners, etc., who are primarily foreign funded, because over 80% of that sector is really money coming in from outside, even if it's philanthropy. And I joke with them and I say, look, we're a middle income country, grants are shrinking, etc., etc. So how's business? How are things going? And they're like, oh, great. We had this $4 million grant from this bilateral. I'm driving this amazing Pajero. Things are looking good. Lobsters at the hotel, talking about poverty. It's all great. And I say, okay, what happens when the grant ends in 3 years' time? I said, oh, we'll write another proposal. And I'm saying, but there is no more grants coming through. Therefore, what it does is makes us, in very exaggerated terms, but it makes us, in our silk suits and ties, professional beggars. So we'll be going to Upper Hill and we'll be going to Gigiri, doing our round with our begging bowl and our proposals, looking for the next grant. That analogy I'm going to use for impact finance in what Hamadia is speaking about. So what we're doing is we're really learning the game. We're really working with a lot of global partners, and we appreciate all the global partners and the interest in Africa. And of course, we are the next market and the next opportunity for saturated continents who are looking at Africa for the future. But what we are not doing is we are not kind of developing the domestic, shall I say, infrastructure in impact finance. The domestic players, the domestic funds to the extent required. And so ultimately what happens is that we just become more of a sandbox, a nice, interesting place. People will fly in and fly out and create a fund, etc., etc. But really, we need to bring our African corporates, our African entrepreneurs, our African high net worth individuals, the pooled funds, like the unclaimed financial assets. We need to move all of this money, and we need to drive a lot of that domestic stuff in local currency as well, in order to balance this kind of dependence on foreign flows. Sorry, but I couldn't resist saying that.
No worries, Arif. I think a necessary analogy. Sarah, I'm going to continue with some of the questions in the chat, and I'd like to ask you a two-part question, if I can. The first part is from Aina, who asked the question, how can capital make itself known to entrepreneurs and dispel the myth that there isn't any affordable capital on the continent? And I think given the work you're doing at Alpha Mundi, but also some of the work you did historically when you served as the inaugural CEO at E Squared, I think you'd be the ideal person to answer this. And then there was a second question that came from Tabiso Tebe, who is from the Jobs Fund, which is one of the large challenge funds on the continent, around how do we overcome one of the key barriers, which is transaction costs related to lending to SMMEs and micro enterprises, given small size of deals, but also, I guess, necessary the transaction costs there. So just to repeat that, how can capital make itself known to entrepreneurs and dispel the myth that there isn't any affordable capital on the continent? And then secondly, how do we overcome the challenge of transaction cost on smaller deals?
Yeah, thank you. Maybe I'll answer the second one first. As an example, perhaps that we use at E Squared. So E Squared is a impact investment company with a mandate to invest in businesses started by historically disadvantaged individuals in South Africa. But since I left in 2018, so it's been a while. I think they have also expanded their mandate to Pan-African businesses, and they're doing wonderful work. But at the time when I was heading up E Squared, the ticket size was really, really small, the ones we were looking at. So one of the things that we did to overcome this transaction cost was to have standardized product set. So we were looking at convertible instrument, and basically for the small ticket sizes, that is the instrument that we use. We had also standardized legal agreement, so no negotiation allowed. This is the type of legal agreement that we use. This is the instrument that we provide. So I think that helps in some ways to reduce the transaction cost. So I think that's one option. To answer the first question about how do we get the capital to be known. So I'm really interested in this challenge of the gap between investors on one side that say, no, there are no bankable transactions, right? That's on one side. And then the businesses that are saying there is no capital. And there is obviously, that is a huge problem. And I've been interested in this topic for many years, and I've offered through partners sort of investor readiness workshop, etc. I think the first question I always ask, and I think that there are problems on both sides. And then there's perhaps many ways we can try to solve this, but one of the challenges on the investor side is this perhaps attitude to say that we want all these deals to be to be available on a platter and hand it to me kind of attitude. I'm not saying that everybody has that attitude, but if you're going to invest in impact sectors in Africa, you have to have the attitude of, let me be part of the ecosystem and create the pipeline with other players in the market. So I think that is such an important and critical aspect of being an impact investor here on the continent. And if you don't have that, I think it's problematic. And the second one on the business side is that I've also noticed that not all businesses are equipped to raise funding from the venture capital type of funding. And I think there's a perception that if you're a startup, venture capital is the thing. But you'll be surprised that even in the US, something like 1% of the businesses raise venture capital funding. And we spoke about some of the debt. Hamdia mentioned the banks. Of course, banks are also really challenging in Africa, right? I'm not recommending banks necessarily, but they're MBFIs, they're microfinance institutions, and there are many businesses that, maybe that your growth is really slow, but, the biggest funding comes from your cash flow. So I think that there is sometimes this perception that you have to get external funding, and maybe that's not necessarily the right approach. So for the businesses to be aware of the different types of instruments and that are available, different types of institutions. And often, I'm not saying this is everybody, but I do come across businesses that say, no, I need funding, but they don't know what kind of funding they want. They don't know what they're going to use the funding for. They haven't done the basic research, understanding the market. So I think both sides could do better to definitely bridge this gap.
Thank you so much, Sarah. And I think a key point
Can I just
around
add what Sarah said, which I think I just want to just re-echo it because she said it. Sarah, in my career, I've met so many entrepreneurs and I've told them, you don't need extra money from anyone. This is where you are bleeding cash. Just cut that and you are good to bootstrap. So that mentality that at all costs to be successful, you need to raise VC money is not true. And, depend upon the kind of business that you have, so you should, and I've always, anytime I coach entrepreneurs, I tell them, research investors. Don't just take any money that comes your way because it's come. Research investors, because there are certain money you don't need, and you don't have to take it. So do your own research, find out the kinds of investors that you need and go seek them out. It's very, very important. The other thing I want to say is that, and Sarah, I wanted to add to what Sarah said, is that we have a lot of entrepreneurship programs in Africa paid for by different kinds of people. And sometimes some of these entrepreneurship development programs are not matching the investor needs. What I just want to say is that, can we just talk? The investors, the people who are running all this business development, supporting entrepreneurial training and stuff, can you just speak to investors when you design the program? Because I've seen it's very disheartening because the person thinks I've gone through a 3-month program, everything is fine. Why am I not getting money? The investors are mean. No, you were not prepared for an investor. Okay, so I think that we should talk because a certain gentleman, you did ask a question about how do we handle deals, small deal sizes, small ticket sizes. When we have these providers actually building these companies, giving the right training, we can do this investment, right? Because I always say that it is the same amount of effort you put in supporting a company that can take 1 million. you probably will use 3 times that effort to support a company that can take 50K. So naturally, everybody wants to do the million because it's easier, a little bit easier because the staffing is there, the talent you can procure the talent and everything, and you can work with them. So it is not that, that is one of the ways to really be able to reduce the risk for investors to come in. There are people who want to do, small ticket investment, but it is hard investment. And then on top of it, we have lots of programs. In fact, there is a lot. When I close my eyes and I open, I can tell you like thousands of programs within the African continent to support entrepreneurs that does not have any consideration of any investor needs. So they go through the investment and come back and they feel like nobody is looking at them, but they've done this training. So we need to really make sure that we sit and we talk and we design these programs to make them effective, to make them, bankable. Because what we look out for as investors in companies is not the same as what an entrepreneurial organization, development organization will look at. So who are you developing them for? So we need to talk. We definitely have to talk to make this work because it's an important work they are doing, and we need to make sure that there is value in that work. Thank you.
Fully agree, Hamdia. I think, the role incubators and accelerators play on the continent is an important one, but let's make sure there's alignment from a deal perspective to also what the funder would like to see. And Hamdia, I'd like to get you back on again. One of the questions that Joyce Masinde asked is around, in the evolving landscape of impact investing, what are some of the key skills or talent gaps that funds are currently encountering, and how are they addressing some of these challenges? So what you'll find with a lot of fund managers, for example, is a lot of solo GPs, small teams. How are we addressing some of the skills gaps or skills shortages on the continent? And if there is a skills gap and skills shortages, maybe phrased.
Yeah, no, thank you. Thank you. It's a very important question. I think it's one area that we really have to work, talent in Africa is, is a key issue, and we need to work around it. In investment management, you need different type of skills to be able to come together. I always say that in fund management, you don't need one person. You need a couple of skills to bring together, because identifying the right company, so your deal sourcing, your deal structuring, your deal negotiation, and deal execution, you need different skills to do that. So we sometimes have gaps around the actual investments, experience, and then in some instances we have gaps around the operational experience. We have people who have done a lot of advisory work, but and consulting, which is good. So then they are able to come up with strategy. But developing a strategy and executing strategy are two different skill sets. And so we really need to get people who really are on the execution line, that, when we do the investment, we are able to execute and we are able to build value. One of the key things in any vehicle that you could see, we could work with, is that when you invest in a company, what really you're taking home, the impact you are making is the value you create in these companies, right? So one of the key themes in Africa right now in terms of impact investing is job creation. So why do we want to move more money at scale? To grow companies to be able to recruit more people. That's the essence. That's the essence of it. And so at the end of the day, if you're unable to create that value in the company to let them grow, then that's a huge gap. So banks have never, banks do it because banks don't create value. Banks invest and wait for you to create the value and come and pay them back. In what we do, we create value in the companies because that is where your impact is felt, right? So especially those who do equity or even quasi-equity instruments, if you do not create value, you are not going to actually get the returns that you are looking for. And so one of the key aspects of actually manager selection is that what is their value creation strategy? So you need to have those, skills in a team. I mean, selecting a good investment, a good company to invest in is equally important as having a strategy to actually move that company from A to B. So those are the gaps that we see in the market that we need to build. From the impact investing side, I think impact measurement, drawing the metrics and then measuring the impact is a huge gap also in the market, and we need to build more talent for that to be able to help us with the measurement. We know that, and Sarah did mention that, if, a lot of people, I mean, when you work in this continent, a lot of people you meet will tell that, oh, insofar as I'm investing in Africa, I'm doing impact investing. I'm like, seriously? Because at the end of the day, the intentionality of it from day one actually is what makes it impact investing, not the afterthought, right? So we need people from day one to be able to build, to be able to build the intentionality in it, build the metrics around it, and measure it, track and report, so that we know that from day one, we said we're targeting, 600,000 people. And at every particular year, this is how we are moving, so that we know that we're actually being intentional. We are build the metrics to measure it, and we are managing the system in such a way that we are tracking and reporting. And that skills we need to build a lot more. Thank you.
Thank you so much, Hamdia, on that. And I think also key, just to add to addressing some of the skills and talent gaps, is looking at some of the executive programs that do exist specifically focused on the continent. We'll actually maybe allow 10 or 5 minutes towards the end of this masterclass for Jason or Daniel to share around UCT's Impact Investing in Africa course, which is a specialized week-long program that focuses specifically on impact investing in Africa. And it covers some of the key areas that Hamdia mentioned, including IMM and the need to make sure that we're able to very clearly measure and monitor impact across the different, investments that you are undertaking. It also goes into fund creation, innovative finance, so a really dynamic course, but I'll get Daniel and Jason to cover that. If I can then come to you, Reef, there's a question, another one from Siko, around, we started with the Millennium Development Goals, then we moved to the Sustainable Development Goals with a target for 2030. What will be the next acronym, and when will be the next target? So will it be 2060, 2080? But I guess a very important question around, we're not meeting some of those developmental challenges, and it does seem like we keep then moving those target dates. So yeah, what's the next acronym? What are we going to likely see as we approach 2030, given that there is this huge funding gap to the SDGs? So it is unlikely that we'll meet our targets.
Yeah, thanks. Interesting question. I I wish I had the name Guterres as my surname, then maybe I would be in a better position to give a look at the crystal ball, but it's really anyone's guess. Some of you might remember the Alma Ata Declaration, Health for All 2000. And then we went to the next thing, and the next thing, the MDGs, and now the SDGs, etc. So I think the name that one would use needs to reflect the most pressing, urgent opportunity and solution one needs to think about for the. It's been generally a 15-year cycle with the MDGs and the SDGs. I would not be surprised if that continued. All I would just say is that what does the planet need? So let's work back from the market, from demand, and let's say climate. So the language will be something around climate. Sustainability, I think, is so critical. We've all talked about it so many times. I think inclusivity is becoming a more and more critical issue. And every time I speak at the Finance Trade Investment Network or the Africa Venture Philanthropy Alliance or Impact Investing Kenya, at any of our events or dinners or lunches or whatever, I keep sort of pressing this thing about, we're not interested in creating prosperity. We're only interested in creating shared prosperity. We don't want the rich to get richer and the poor to get richer. So inclusivity is really critical for us. I think that one of the other kind of very important thing is some language to sort of talk about resilience or local ability to sustain all of the above through local agency. Philanthropy and others, talk about localized action, etc., etc. but in whatever language we use, something that says that, look, ultimately we are the masters of our own destiny. And in fact, it's not us. Cutting edge development doesn't happen, in Nairobi and Joburg. It happens out there where the needs are the greatest. So that's where I think the resident capacity and the agency needs to be. How do we make that happen? So I think there's a lot of this movement around shift the power with philanthropy, with Wings and all our partners, etc. But something that talks about that sort of indigenization of agency. But also not to say that we're not world citizens and we don't want the best from the West and the best from Asia and the best from all over the world, but we do want to have a certain level of agency and be the drivers of our own development process. So, I mean, if I look at sustainability, I look at inclusivity, I look at climate, I look at resilience, and I look at this local agency, then your guess, cook up some kind of an acronym that fits all of the above, at least in my opinion. Thanks.
Thanks so much, Arif, and thanks for taking a stab at that. So if I can maybe give you the last question, which is, what is the future outlook of impact investing in Africa? And yeah, once you've answered that, I'll then come to each of the panelists for a very short closing statement from each of them. So Sawa, back to you. What does the future outlook of impact investing look like on the continent?
Yeah, such a huge responsibility to answer that question. Well, the future, I want to say the future is bright, but perhaps the future is, it's perhaps more from the perspective of there is so much need. So we have to, we have to make it work in some ways. What was interesting the other day, though, and if I compare this discussion to what's happening in developed markets like the US, is that there was a discussion the other day about consolidation happening, particularly in the US. So something like 5 impact investing GPs accounted for like almost 50% of the total assets under management. I was really intrigued to hear that. Maybe it's not surprising that there is consolidation, but the extent was kind of surprising. But on the other hand, I was thinking about, what does that mean for us on the African continent? And I almost see that the reverse in some ways, because the continent is so diverse and it requires, I think what is really critical are the local expertise. And Arif was speaking now about sort of, the community, local level community. And then for that kind of work to be done, we really need talent, as we were speaking about before, that are on the continent. So perhaps there is a different path for Africa. And, I also see that more and more fund managers are focusing on sort of specializing on specific themes that are led either by or a combination of investor demand and the needs in the market. So I would say that the future of impact investing in Africa is local, highly specialized local teams, and managing, preferably increasingly more local capital.
Thank you so much for that, Sawa. I think, I love that you started that the outlook is bright and with highly specialized local teams. If I can then also close it off with the rest of the panel, if you can give us a 1-minute closing statement, sentiment, something you'd like the audience to take away from this discussion. Arif, we'll start with you, followed by Hamdia and then Sawa.
Yeah, thank you. I think I'd just like to say that, we also need to be more inclusive in terms of the over 50 countries across Africa. And typically what you tend to find, and in this report I referred to earlier, quotes that 68% of all funding, and we're looking at about $4.1 billion in 2023, is only going to Kenya, Egypt, Nigeria, and South Africa. And we know those are the usual suspects in almost every conversation when folks come in and talk to you about a pilot or something they want to start. And my worry is that what happens and what are we doing about kind of a broader Pan-African footprint? And we have, I think, a responsibility to think in Pan-African terms. I also think that, you know, the future is very bright because 20 years ago, 25 years ago, you didn't hear the kinds of conversations you hear today. I think we're seeing some really amazing, you know, local savvy, local capacity, local ambition, local confidence. We're seeing some amazing entrepreneurs, young entrepreneurs, you know, getting into social enterprises, creating funds, etc., etc. You know, when we were kids, we were told success is, you know, get a nice suit, a tie, become a CEO, and have a nice office. Well, those days are gone, you know. So kids are all talking about funds, impact funds, doing this, doing that. To me, I think there's a very bright future, and I think that we just need to make sure we have the guardrails to protect the kinds of things I said we need to protect, so that we don't lose our kind of our African assets. But huge opportunity, and our greatest existential threat, but also our greatest opportunity, is the power, the energy, and the creativity of our youth. And I think in this sector, we really need to harness that in a very purposeful way.
Correct.
You know, and stop these boats going across the Mediterranean, stop the terrorism, stop the stuff that people are doing because they don't have livelihoods. And so essentially, we need to take this very, very seriously. And so impact investing should be really thinking also about how we can play our part to create this kind of local solutions. Beyond that, you heard my line, let's drop our egos, logos, and silos, let's converge for impact. And that also means, you know, how do we as impact communities, Kenya, South Africa, Nigeria, Ghana, Zambia, Egypt, how do we all work much closely together than we have so far? And I think July is a good opportunity to discuss that. I also think we need, my last point, we need, whilst we're doing all these, you know, interesting initiatives and fascinating stuff that everyone's talking about, we need what is called intellectual underwriting. Where is the intellectual analysis, underwriting, thinking, strategic analysis that is going on around everything that's going on? And that's where I would look at Jason and Daniel and look at Bertha and folks and say, guys, amazing. We need this kind of training. We need these kinds of courses. We know E4 Impact and others are trying to do similar work. But really, we need to expand that intellectual bandwidth in this sector as well for people who are practitioners on the ground, so that they can also stand their own when they're having these discussions and partnership negotiations with partners from other parts of the world. I'll stop there, but delighted to have discussed and met all of you, and thank you for the opportunity.
Thank you so much, Arif. Really appreciate your participation in this panel. Hamdia, if I can please come to you.
Yes, thank you. Thank you so much. I think I agree with both Sawa and Arif that the future is bright. I think that, you know, and I'm going to wear my investor cap, so I'm going to just talk about, you know, what I think that, what makes Africa the future bright, right? Because we need to turn these opportunities into actionable investment opportunities to put money and make money. We have a youthful population in Africa. In fact, statistics from UN and other organizations, the World Bank has said that by the year 2050, every 1 out of 4 people you meet in the world will be African, and they're going to be young, which means expanding workforce. There's a lot of research that is talking about technology adoption. Technology adoption because we have a young population, right? So we're going to adopt the technology a bit faster. We have potential in agriculture. We need to be able to feed ourselves and feed the world. We have more arable land in Africa than anywhere else in the world. And so we have that potential to be able to feed ourselves and feed the world. And trade, after I mentioned it earlier, is one of the things that we can really run on the back of, do more cross-border trade, cross-border collaborations, and make sure that things work. So for me, I think the future is very bright on the social side. On the environmental side, same. I mean, we have vast potential for solar and wind energy. I mean, we have done a lot. In Ghana, for example, we have a hydro. We had hydro. We built the first hydro plant in the 60s, okay, giving about 2,000 megawatts. And at that time, there were questions about, you only need just about 150 megawatts. Why do you want to build a 2,000 megawatt hydro? So, I mean, we have vast opportunity to actually be a potential for climate change. We just need a lot more investment to be able to do that. So the future is bright, but and just also to say that, as Sawa mentioned, yes, the future is bright. We need to look at these opportunities very well and try to put more money at scale, but we need to do that with local teams, and we need to do that also with local capital. That's what I mean. And so that, we can build such North-South collaboration, South-South collaboration, to be able to make sure that we build and we build better. And as Arif mentioned also around building capacity, I think that's UCT, Bertha Institute, these programs are very, very important. They are very, very key. We need to be able to really bring the expertise on board to really train the next generation, and also ensure that people are speaking from the point of view of expertise that they have done, so that we are able to really mentor, train, and coach the next generation. And so, thank you for what you do, and thanks everyone.
Thank you so much, Hamdia, and thank you so much for joining this panel. Sawa, a closing sentiment, if you could keep it as short as possible. I guess everyone has built upon what you have shared.
Absolutely. I think I already said. So I think my main takeaway, Arif said, we should work together, not have the logos, egos, silos. And Hamdia said, let's talk. So, I think let's keep on talking. And Bertha Center has been, it has done incredible work in South Africa, moving the industry forward. So, thank you so much for convening such an important discussion. And it's been incredible to be part of this.
Thank you so much. As we come to the end of this webinar on the current state of impact investing on the African continent, I want to express my sincere gratitude to all the panelists, Arif, Hamdia, and Sawa, to all the participants who are able to join us today. Your insights, questions, and engagements have truly enriched this discussion and shed light on the opportunity and challenges of impact investing on the continent. I think what we've heard throughout the conversation is some inspiring insights on innovation, collaboration, partnership, and impact across the continent, from the growth of impact investing in various sectors to the vital role of local entrepreneurs and social enterprises in driving change. It's clear that impact investing has the power to catalyze sustainable development and improve the lives of people across the continent. I'd like to encourage you all to stay connected, continue the conversations, and explore opportunities for collaboration and partnership even beyond this webinar. I'd now like to hand over to Daniel, who's got about 4 minutes. Sorry, Daniel. To share more about the Impact Investing in Africa course. From my side, thank you once again, and look forward to seeing the impact we can all create together.
Thanks, Shaluba. I'll just take a 1 minute. We will email this information through to everybody. I trust you can see my screen, Shaluba.
I can, Daniel. Thank you.
Yeah, perfect. So I just want to share quickly, this follows really on the questions asked today and the thesis of this discussion that looks at impact investing in Africa specifically. And we are fortunate that we are partners with a lot of amazing impact funds and influencers and stakeholders in this space in Africa. So we've convened all this information over the last few years and presented this course in Cape Town historically, and we are now taking this into East Africa as well for the first rendition this year in Kenya from the 8th to 12th of July. And if you look at the course overview, you'll see we really take it from broad perspective, looking at the impact investing landscape, and then drilling down into how do you actually build impact investing portfolios, what are the innovative financial tools you can use to catalyze investment, to bring investors from across the world, but also into Africa, into actually taking responsibility, not just to catalyze change, but to really speak to the opportunities in Africa. Look at fund creation and then emerging trends and impact measurement and management as such. It's really an amazing course. Please, I've sent the link in the chat. We will email this through to everybody as well. Share around if you think somebody might be interested in this, and hope to see some of you in our course as well. Just if you go follow the links, you will see some feedback from previous renditions. I think our alumni is at 400 at the moment. That's done this course with us, and we are really fortunate to have a lot of alumni really pursuing and having a massive influence in Africa. So it'll be great to see some of you in that course. I will put the chat after the link in the chat again for everybody to see. And we're at 5 o'clock, so we have to wrap. Thanks a lot.
Thank you so much, Daniel. Really appreciate it. I think that's it. We've got 2 minutes to go, if my watch is correct. I think what would be nice is we haven't seen too many faces. We've seen a lot of people in the webinar. So if we can maybe see some faces, we'd like to take a short screenshot if people are comfortable. I'm not sure if Jason's maybe going to take that, but if people could maybe turn on their cameras, if you are camera appropriate, we would like to see what, impact on the continent is looking like, just to make sure that we're seeing some of the faces. We're seeing, yeah, okay. I'm loving that people are turning on. Jason, I'm not sure if you're going to take a screenshot for us. And thank you once again, I think, to emphasize for all of you who've made the time to join this conversation. Thank you for your questions and for your participation. We look forward to some of you staying plugged in, staying engaged, and hopefully we'll see some of you on the course. As Daniel mentioned, it will be running in July in Nairobi, Kenya, and then again in September in Cape Town, South Africa. So thank you once again. And I don't know, maybe I'll count us down to 3 and we can all smile for the camera. 1, 2, and 3. Thanks, everyone. Jason, were you able to capture that? I think that's it. Yeah, as Daniel mentioned, we'll send some communication, and thank you once again for attending. Look forward to keeping engaged and plugged in with all of you. And to our phenomenal panelists, Arif, Sawa, and Hamdia, thank you, thank you, thank you.
Thanks
Goodbye,
to our,
everyone.
Thank you, our moderator.